income from house property, income from business or profession, and capital gains. These four sections are specific head sections. That means whatever they have mentioned in that section, charging section, is specific to those. Salary means employer-employee relationship, that will be taxable under the head salary. If it is house property, any rent you receive from the property, that will be taxable under the head income from house property. If you are doing any business or profession, that will be chargeable under the head PGBP. If you transfer any capital asset within the definition of capital asset, if you transfer any asset, that will be chargeable under the head capital gains. Any other income which doesn't fall under those four heads, it will be chargeable to tax under this other source, like lottery winnings, betting, gambling, if you earn any family pension, if you receive any dividend, if you receive any gift, all these things are comes under this, falls under this income from other source. In this chapter, mainly gift is very important. Taxability of gift. Okay, we extensively study only that, taxability of gift. Receipt of money or property without consideration or without adequate consideration by any person. Okay. See, which is nothing but gift. Gift, it will be in the form of cash, will be form of movable asset, or immovable. You can get the gift by in the form of cash, in the form of movable asset, or in the form of immovable property. Okay. This movable asset, whatever we saw the definition under capital gain, what is the capital asset? Only those assets are falls under this movable property, movable asset. Shares, jewelry, archaeological collection, drawings, paintings, sculptures, those things only chargeable. Okay, what is not treated as movable asset? Personal effects is not to be charged. Under capital gain also it is not taxable. Here also it is not taxable, excluding jewelry, painting, drawings. Excluding that, other movable property of personal nature is not chargeable to tax under this head also. You get the question. Mr. X received Audi car on the occasion of birthday. Is Audi car chargeable to tax? No, because it is not covered under the definition of asset. Okay. As far as possible, I will go through some of the assets also. If we miss anything, please remember whatever the capital asset definition we have seen, only those are chargeable to tax here in this chapter also. Other capital asset are not chargeable to tax. Immovable asset, land, building or both. Cash, hard money. Okay. Now listen. Here, if you receive any cash, if it exceeds 50,000 in a year, then only entire cash gift is taxable. guys understanding? No, if I give you 60,000 rupees, that 60,000 rupees will be taxable in your hands as gift. If you receive any movable asset as gift, if the value of that gift exceeds fair market value of that gift exceeds 50,000, then it becomes taxable. If you receive any gift, you receive any movable asset for which you pay consideration. You pay some consideration. If the inadequacy of the consideration, inadequacy means the fair market value is 2 lakhs and you pay 50,000. The inadequacy is 1,50,000. In this case, whatever the inadequacy is, if it exceeds 50,000, then all aggregate of inadequacy is chargeable to tax. Are you guys understanding now? Inadequacy means what? Whatever the consideration you pay, having regard to the market value or the cost of that asset, the difference between the two, if the difference exceeds 50,000, then the difference is taxable. If the difference doesn't exceed 50,000, then nothing is taxable. Okay, if you do not pay anything, any consideration, you receive the asset without consideration, then if the fair market value is more than 50,000, then it is taxable, else it is not taxable. Okay, these two are very straightforward, cash and movable. In case of immovable, I will take the example, then I will explain. You have received a land for rupees 5 lakh worth of land you receive. The stamp duty of the land is 7,50,000. You receive the land. You receive a land for rupees 5 lakhs, but the stamp duty value of the land is 7,50,000, and you have paid a consideration of 4 lakh. Understand the things. The cost of the land is 5 lakhs. You have paid a consideration of 4 lakh, and the stamp duty is 7,50,000. In that case, first you need to arrive at the inadequacy. First you need to arrive at the inadequacy. Is inadequacy exceeds 50,000 here? In this case, inadequacy exceeds 50,000.
Yes, sir.
Yes. This is the first one. Second one is your stamp duty value is more than 110% here. Is your stamp duty value, this is SDV. Is your SDV is more than 110% of consideration? No. Is your stamp duty value more than 110% of your consideration? This is the consideration, sale consideration. That means fair market value. Is your stamp duty value is more than 110%? 110% comes to 5,50,000.
Yes,
is
sir.
your stamp duty?
Yes, sir. More.
Yes. Yes, in that case, whatever there is a inadequacy that will become chargeable to tax. In this case, inadequacy is 1 lakh. Okay. Now, there are few exceptions. Whatever the gift you receive, all gifts are taxable. The question becomes, they have given the list. If you receive any gift from relatives, it is not taxable. Relatives means you, your spouse, your children, that is lineal descendant. Your mother, your father, their father, their mother, your brothers and sisters, your spouse, her mother or his mother or father, their parents, spouse brother, spouse sister, all are covered as relatives. If you receive any gift from them, it is not at all taxable. Even though if it exceeds 50,000, not taxable. First one. That means gift from relatives, not taxable. Second one. If you receive any gift on the occasion of marriage, it is not taxable. On the occasion of marriage means from the relatives also, from non-relatives also, if you receive any gift, that is not taxable if it is received on the occasion of marriage. Okay? If you receive any gift under a will, it is not taxable. If you receive any gift by inheritance, that is also not taxable. Okay, like that, they have given so many lists. These 4 are important, hence I mentioned that. See, from relatives shall not apply to any sum of money or property received from any relative on the occasion of marriage, under a will or inheritance, or any donor who is in contemplation of death. If you receive any gift, not taxable, like that they have given. Of this, these first 3 are important. Okay, in this chapter, only gift is important. What is meant by property they have given? Property means immovable property being land or building or both, shares and securities, jewelry, archaeological collection, drawings, paintings, sculptures, any work of art or bullion. If you guys remember, the same thing, the capital asset in the exclusion, in that exclusion, in the inclusion list it is there. In the exclusion, inclusion it is there. There are 6 assets we saw now, that one. Who is relative? Spouse of the individual, brother, sister, everything they have given. Please go through once. I will explain this one. Lineal ascendant, lineal descendant, spouse, brother, sister of the spouse, of the parents, like that they have given. Please go through once. Okay. Apart from that, I don't think you will get the question on this. 1 or 2 points I will touch. If any income, because I don't want to tell anything now. Once I finish the TDS chapter, I could have told, but just we are in the same page. Let me explain. Assume that you have won a lottery. On winning the lottery, they will deduct TDS and they will give you the net amount. You have to always take the amount after grossing up. Grossing up means whatever the tax they have deducted, you have to add that tax and consider it as income, because income is nothing but net income plus TDS is called as income. I don't want to tell that one now because we may not be knowing how much is the TDS. When we do the TDS, there are certain incomes on which TDS is to be made. If that is made, you have to include the TDS portion also and get the total amount to be offered for tax. One is lottery income. Second one is dividend. Earlier, dividend was not taxable in the hands of the recipient. Now they have made the amendment. Now it is taxable in the hands of the recipient. Like that, all other incomes which doesn't fall under other four heads will fall under this head. The one more important one is family pension. If any person receives the family pension, whatever the family pension received, 1/3 or rupees 15,000 will be exempted as standard deduction. In salary, we used to give standard deduction of 50,000. No, the same standard deduction, it will be 1/3 of family pension received or rupees 50,000, whichever 15,000, whichever is less, you will get the deduction from whatever the family pension received. See here, they have given the list of incomes which is chargeable to tax. Family pension, see here, 1/3 of such pension or rupees 15,000, whichever is lower, you will get the standard deduction. Okay, this one is slightly comparatively important apart from dividend, gift. Taxation of dividend. As I said earlier, it was not taxable in the hands of the recipient. Now it is taxable. These are all linked to TDS chapter. When there is a TDS made on dividend, the gross dividend needs to be offered to tax. Likewise, interest from bank account, FD, you receive the interest. If the bank deduct the TDS, you need to add the TDS amount and offer the bank interest as income from other source. Okay, this much is from income from other source. From this side, you can get the deduction of whatever the income you are offering to tax, any expenditure incurred. Like if you receive any dividend, if you have paid any expenditure like brokerage, those things, you will get the deduction. See, Nikhil, a dealer in shares, received from his friend Anshul the following without any consideration. That means gift. Cash gift of rupees 1 lakh. Is it taxable or not taxable?
More than 50,000 taxable.
Taxable. Bullion means gold biscuit. Fair market value 75,000 on his anniversary, marriage anniversary. Is it taxable or not taxable?
Taxable, sir.
Marriage is exempted. Anniversary is taxable. It is taxable. Plot of land at Gurgaon. Stamp duty value 7,50,000 on the date. Taxable or not taxable? Without consideration means you haven't given any consideration. 7,50,000, it is taxable because it exceeds 50,000. Like this, they may give the question. You need to tell whether it is taxable. If taxable, what is the reason? If it is not taxable, what is the reason? If they ask, advise on the tax treatment or give reasons, you need to give the reasons. What are the reasons? Here we saw no, it exceeds 50,000. This is also it exceeds 50,000. Anniversary is not covered under exception list. Only marriage is covered. Stamp duty value, immovable property without consideration. the stamp duty value will be considered as value of gift. Like that, they may add two or three more items. Okay, like that, cash gift of rupees 20,000 each from 3 friends. 20,000 each from 3 friends. How much amount it would come? 20,000 from 3 friends means 60,000. Has it exceeded 50?
Yes, sir.
Then it is taxable. Cash gift of 10,000 from 10 persons received on the occasion of marriage, taxable or not?
Not taxable, sir.
Not taxable because it is received on the occasion of marriage. Like that, they will ask the question.